I'm David Frazier, aka the Market Monk. Well, today's show is going to be rather short, and the reason being is quite simple. There's just not much to talk about today. Remember, unlike most shows regarding the financial markets, this show is not about trying to entertain you. If you want entertainment, you should probably go somewhere else. Instead, this show is about only the facts and the factors and developments that matter. That is, events and developments that are likely to affect the value of your financial market portfolios. And by giving you the facts, as opposed to talking about all the noise and to create some interesting story, hopefully you'll be able to make much better decisions regarding your financial market assets, and therefore you'll hopefully have much more money that you can spend in any way that you want in regard to entertaining yourself. So the only news of any significance that I uncovered today was the fact that Twitter reported after the markets closed today that its revenues rose pretty sharply again in the first quarter of this year, up 119% versus the same quarter a year ago. However, Twitter also reported that its net loss for the quarter ended March 31st widened by 390% versus the same quarter a year ago. That its losses worsened by 390%. That really comes as no surprise to me. I mean, I wrote an article for a financial market website back during December of last year. I think it was on December 17th for Newsmax Media for their moneynews.com website. You can go there and read the article. Just in their search field, type in my last name, Frazier, and the stock symbol TWTR. And I wrote an article saying how Twitter was doing a lot of things that make a lot of sense in trying to grow its revenues, but that I saw little likelihood that the company was going to make any profit in the near-term future. I mean, they've yet to make a profit since they went, the site was founded, and the Twitter site was founded in 2006, and I don't know if they're ever going to make a profit. So as a result of its losses widening and its not signing up as many new users as Wall Street analysts had expected, its stock was at one point down at least 10% in aftermarket trading today. And I expect for its stock to pull back considerably on Wednesday of this week. Now, looking forward, we do have some important announcements that are due out on Wednesday and again on Friday, and both concern the employment situation in the United States for April of this year. And I'm hesitating a bit there because now, gee, I'm not sure whether that report is for the month of April or whether it's actually for the month of March, which really annoys me. If you give me just a moment, I'll be able to find out. Well, let's just move forward. Well, let's see, just a moment here. This is about the facts, so let's get the facts right. One moment, please. I mean, I look at it, more than 100 economic statistics every month, and so I don't always know right off the tip of my tongue the specific details on any given statistics. And sure enough, employment stats that are due out by automatic data processing tomorrow, that is on Wednesday, as well as the employment statistics that are due out from the U.S. Department of Labor this coming Friday pertain to the month of April. And I expect the employment situation to have improved once again during April. I'm not going to make any specific forecasts what the actual numbers are, and the reason being is quite simple. I have found that I'm not very good at forecasting those numbers. Quite the contrary, I tend to be right or close to the actual numbers pretty much about the same amount of time that I tend to be wrong. So I could just flip a coin and get my forecasts right. I don't know what the numbers are going to say, are going to be. But the so-called experts on Wall Street are no better at this than me. And actually, I find that to be a very important, significant fact, given that Wall Street investment banking and brokerage firms have huge, massive resources to spend on research. So you would think that given those massive resources, well, surely they could be better at forecasting those numbers or any other numbers, whether regardless on any given economic variable or companies' revenues and earnings, whatever it may be. You would surely think that given their massive resources that they would be better at forecasting those numbers than I would be, just one person operating here, with a little bit of assistance from a partner of mine and some people that I contact regularly, but it's pretty much me. Anyway, so I don't know what those numbers are going to be, but I expect that there were improvements in the employment situation during April, and if we see that there was in fact another improvement, I expect stocks to react favorably. So, gee, I still spoke longer than what I expected, but it's less than 10 minutes, so hopefully this is not too long for you. That's all I have for now. I'll speak with you again tomorrow.